Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Friday, October 7th. Stocks on Wall Street are rising again this morning, building on the strong gains of the previous three sessions. Earlier this morning, equity futures had been pointing to a lower open, but that was before the release of the September employment report. It showed 103,000 non-farm jobs created in September, far more than economists were expecting. In addition, job growth for the previous 2 months was revised higher. The data now show 57,000 new jobs in August versus the original reading showing no gain, and 127,000 workers were added to payrolls in July. However, the report may not be as completely positive as it may seem at first glance. A big part of September's gain was due to the return of about 45,000 workers to Verizon Communications following their strike in August, and the unemployment rate stayed stuck at 9.1% for the third straight month. Federal Reserve Chairman Ben Bernanke has been pushing Congress to take steps to tackle the high unemployment rate, saying the economy is close to faltering, and President Obama has been lobbying legislators to take up a vote on his job creation bill.
Investors are reacting to the employment report with a renewed round of buying. The Dow Industrials are rising further above the 11,000 mark, and stocks across Europe have turned higher as well. The move toward riskier assets is also giving a boost to commodities. Crude oil is now back around $83 a barrel. But on the other side of that coin, traders are moving out of assets generally perceived as safer. The most popular safe haven asset lately has been U.S. Treasuries. Prices are dropping on the bonds this morning, and the yield on the benchmark 10-year note is jumping all the way to 2.1%. The U.S. dollar has also benefited from a flight to safety lately, and that trend is reversing this morning as well. Right now, the euro is rising to nearly $1.35 against the greenback.
The British pound is strengthening against the dollar as well, despite a downgrade of 12 of the nation's banks. Moody's investor service cut the senior debt of Lloyds Banking Group and the UK arm of Spain's Banco Santander by 1 notch, and Royal Bank of Scotland got a 2-notch downgrade. Moody said the cuts reflect the probability that the British government will not provide support to the banks if they need it in the future. Shares of RBS are dropping more than 3% on the news, while Lloyds is down more than 1% in London trading. Separately, Eurozone leaders have asked the European Banking Authority to conduct a new round of stress tests on the region's financial institutions. Most banks passed this summer's test, but economic conditions have deteriorated sharply since then.
Finishing up with some of the day's biggest stock movers. Shares of Illumina are tumbling 35% this morning, after the biotech firm withdrew its full-year earnings and sales forecasts. Illumina also said third-quarter revenue will come in much lower than expected due to an unprecedented slowdown in purchasing. The company blamed the decline on uncertainties in research funding and tough economic conditions. That news is dragging down the entire biotech sector, in particular life technologies. It's dropping more than 5%. However, we are seeing some big gains in energy stocks, thanks to that September jobs report. It's raising hopes of an improving economy, which would increase demand for oil and natural gas. Among the biggest winners in the industry are BP and Chevron. And finally, keep an eye on shares of Dollar Tree. The board of the discount store chain approved a stock buyback plan worth $1.5 billion. Right now, Dollar Tree is up about 1.5%. That's the latest from Weiss Research. Have a great trading day and a fabulous weekend.